Well, Tesla unveiling cheaper versions of its popular Model Y and Model 3. It's part of an effort to boost sales after the federal EV tax credit expiration. Joining me now, Garrett Nelson, CFRA analyst. Garrett, good to see you. The shares fell yesterday. They're falling a little bit more today. Does this make a difference? Are we going to see any kind of boost to sales from these cheaper models?
Sure. Thanks for having me. We do think it will help them from a sales volume perspective, but only on the margin. It's really inevitable that Tesla is going to experience a pretty significant drop off in sales volume starting this quarter, starting in Q4. The expiration of the federal EV tax credit is just too great of an event to prevent that, and it's at a time where EV sales are cooling across the board as is, and so this really doesn't help. And I think the announcement was a big disappointment. I think there was speculation that a lot of investors were thinking they might finally unveil the Roadster, which they promised a long time ago, or some other model, which didn't happen.
Something that our autos reporter Prosper Money was pointing out earlier is, if you get rid of the tax credit and you have the cheaper base price of these lower priced vehicles, is the car still more expensive than it would have been with the tax credit?
Yeah, it's a close call. You really have to, do a case study analysis and exactly what you're getting for that money, which is a stripped down version. It's a less expensive, but it's has less features, a lower range. Just not the same type of quality of vehicle that as a standard Tesla vehicle. So it's really a trade-off. And I think the question is, how much demand is there at this point for Tesla vehicles? We know they've been losing market share in the EV market in the US, in Europe, and China so far in 2025. They did have a much better than expected third quarter in terms of deliveries, but still, if you look at their year-to-date market share, it's lower than it was a year ago. And so, the EV sales are cooling. The EV tax credit expiration it isn't going to help. And we think really the smartest thing that Tesla could do would be to introduce a hybrid vehicle, because that is a market that is growing very fast. If you look, hybrid sales in the US were up 37% last year, which compares to only 7% growth for pure battery EVs. So that's, something we think Tesla should think about.
But Garrett, let me ask you this. Has Elon Musk lost interest in cars, right? Every time you hear him talk about Tesla, he's pushing the more AI parts of the business, he's pushing robotics, he's pushing robo-taxis. He's not really talking about this core car business, certainly not with the same enthusiasm that he is for the other stuff. And so does that mean Tesla, which has this dominant position in the EV market that's still out there, does that mean they risk losing it to some of the established car companies that are, rolling out more and more competitors?
We don't think he's lost interest in cars. Certainly, there are a lot of synergies between what they're doing in AI and their development of full self-driving, autonomous driving software. So there's still a lot of, it makes a lot of sense to, the AI and the auto business are complementary. But the big problem is that Tesla's vehicle portfolio is pretty stale at this point. It's been 5.5 years since they made first deliveries of the Model Y back in March of 2020. And in that time, they've only had one new vehicle model, which was the Cybertruck, which has turned out to be somewhat of a flop, actually, from a commercial perspective. And so their portfolio is very stale. And in the meantime, you've had all their competitors come out with a variety of new EV models. And so that's why they've lost market share. And so the challenge is really to generate excitement among the consumer base. And, we just still aren't seeing that. The announcement yesterday isn't the kind of announcement that's going to really generate a lot of excitement in our view.
Do you think there's any chance they would come out with a hybrid model? Have you heard anything from folks inside the company that this is something they would even consider?
We haven't heard anything, that they're considering along those lines, but it would be a prudent move in our book. And yeah, they're right. I mean, they're focused more on robotics, on AI, on energy storage, and the auto business has kind of taken a back seat in terms of innovation.
And then finally, Garrett, you do have a sell equivalent rating on the stock, right? So is it just a matter of waiting for the numbers to get somewhat better, some kind of inflection point here in sales? And what would cause that to happen?
Sure, we just downgraded the stock to a sell a few weeks ago, and it's because after the stock price had essentially doubled from the low in April, and looking at street expectations, we felt that they were too high, that the valuation was frothy, trading at north of 200 times our earnings estimate for next year. And those are the types of conditions which have really preceded sharp sell-offs in the stock over the last several years. The stock has had several peak to trough declines of 40% or more over the last several years. Each time it has recovered from those sell-offs, but typically what happens before those sell-offs is that estimates are too high and the valuation is very stretched. And so we think this is a stock right now that's susceptible to downward revisions in estimates and to multiple contraction. And those are the conditions which are really a setup for a sell-off in the stock.
Interesting. Garrett, good to catch up with you. Thank you.
Thank you.
You used to work at Tesla, so I feel like I'd be remiss, John, if I didn't ask you about this. Musk did reveal these cheaper versions of the Model Y, Model 3. What do you make of it, John? I'm just curious to get your take. What do you think it could mean for growth and margins at your former employer?
Well, I think we all know that the market for cars gets multiples larger as the price comes down. In other words, the largest market for cars is between $20,000 and $30,000. It's a huge sweet spot. It's also large between $30,000 and $35,000, and so you're seeing product in that market space, like the Chevy Equinox, which is now the #2 non-Tesla selling EV, just out of nowhere. It's exploded because it's a $35,000, $34,000 small SUV that's got plenty of room and plenty of range. I think in Tesla's case, this is what disruption looks like when a company starts to really mature. It's not disruptive, it's kind of iterative change. I think investors were looking for them to come down into that $25,000 to $35,000 range. And I think what Tesla's signaling is they're willing to iteratively change the product down to, say, $40,000, but they're putting all their capital in two other businesses, autonomous driving and robots. And so I don't think we're going to see disruptive change out of Tesla's car lineup, would be my prediction, because they're actually maturing and pointing their capital at two different opportunities now.
Now that $7,500 tax credit, John, has gone bye-bye, I am curious finally, just to get your take. What do you think demand for EVs looks like here for Tesla and the broader industry?
I think we get the advantage in this market, the EV market. The other areas of the world are ahead of us in adoption, both Asia and Europe. And so you can look at case studies and kind of find the answer to that question. France and Germany 2 years ago retired their subsidies, retired the leasing benefit that they had. So it looked a lot like us until last week. And what happened is that the EV market continued to grow. There'll be a dip for sure in this quarter, I would imagine. But over time, their EV markets continue to grow. I think when we see in the U.S., roughly 10% of car sales this last quarter were EVs, another 12% were hybrids. So that's getting close to 1 in 4 cars sold that are electrified in their transmission or in their propulsion. And what that means, I think, is that's a market that's ready to stand on its own. So it's probably not the worst thing in the world that the subsidies come off, but I don't think that's going to cause a nosedive in demand. In fact, I think you and I could talk a couple of years from now, and we may see that the industry has grown if it looks like the rest of the world.
John, we're always lucky to have you on the show. Thank you.
Thanks, Josh.